Hey guys, this is Balto. I've been getting a lot of requests for this video, and I thought today's the day that I'll actually do it. I did record my earlier short trades, but unfortunately something happened and I lost the files, so I won't be inserting them into this video. I might try to insert it later or just do a live trade for you guys another time. I did make you guys a PDF to use when you decide you want to start stepping into short trading. If you guys want to access this PDF, please join Longhorn Investing, the link below, and go ahead and ask me for it in free chat or general chat. But yeah, this is going to be a tutorial video on how to short a stock using Webull. This is going to cover what you need, how it works, and how to calculate that hard to borrow fee. A lot of new traders, they get discouraged on shorting a stock. They go ahead and they see that little short. They put in their quantity of how many shares they want to short. They place the order and they see that gigantic borrowing fee. You know, they see 73%, 150%, whatever. Sometimes it's as low as 6%, 5%, 1%. It doesn't really matter. They just see the big numbers because they're playing with tickers that are moving faster. And they think like, heck no, I don't want to pay that gigantic percentage when I am shorting a stock. So they don't do it. I'm going to explain what that 73% means, how to calculate it, and how much you're actually going to be paying, because you're not paying 73% of your profits. I'll tell you that. So I'm going to jump right in. What do you need? You need a margin account. I know a lot of new traders have been asking me recently, what kind of account should I open if I'm just getting into trading? I always tell them cash accounts because you can do day trades, infinite day trades, as long as your cash settles. Whereas in a margin account, you get a lot of penalties if you try day trading. So if you do want to get into shorts, you will have to open up a margin account or switch your accounts. If you don't have that, you can go into the Webull app, go into the settings tabs, and you can go into your account information, click on the manage my account tab. It'll be in blue, and you will see the change your account from cash account to margin account. To make the switch, you're going to need to be all cash. What that means is that you're going to have to sell any positions that you're currently in, and any orders that are waiting to be filled will have to be canceled, and you have to wait for all that cash to settle. Once it settles, you can initiate the transfer from a cash to a margin account, and it's going to take approximately 6 days on Webull. Right now, that's the wait time. I think that was the wait time on mine when I decided to switch. The process may be different with other brokerages. I don't know. I haven't done it with another brokerage, but you will have to do the research if you're on a different brokerage. So how does it work? So if you're unsure of how to short a stock, you as the short seller, what you're essentially doing is that you're borrowing shares from a broker. So you're borrowing shares from Webull, let's say. Also TD Ameritrade, Robinhood, etc. Whatever you're trading on, you're pretty much borrowing from the broker. The broker is going to sell the shares on the market, however many you want. Today I did 10. Then you're going to wait for those shares to drop in price, that share price to drop. Then you're going to buy back those shares. You're going to buy it back and pay back the broker. That difference in the price minus the fee is going to be your profit. All right, so this is a picture I found on Google. I thought it did a great representation of what you're trying to do. So this is you as the short seller. You're borrowing shares from the broker. This is Webull. Webull is going to sell your shares that you ask them, like, hey, I want to short 10 shares. They're going to say, okay, we're going to sell 10 shares for you. Then once that price drops, you are going to buy back the shares and you're going to pay back Webull. And then whatever the difference is minus the fee is going to be your profit. That might still seem a little bit confusing. So the best analogy I can use is when you're exchanging money. So when you visit a foreign country, if you don't know, your currency may not be accepted in that foreign country. So you have to go to the bank and you have to exchange your currency. So for example, if I go to the UK and I need to exchange my dollars for euros, I'm going to give them my $1, and in today's economy, $1 is worth 0.89 euros. So the dollar is worth less than 1 euro. If that can exchange that exchange rate might change tomorrow. So for example, the US economy can drop tomorrow and the US dollar is going to be worth less. So when I go to exchange that $1, I might get 0.50 euro instead. So I might get like half a euro instead of 0.89. Just depends on the economy, what's going on, and what your money is worth at the moment. So pretty much what you're trying to do when you're shorting is you want to get the most money back. So in my example, you want to get the most euros for your $1, right? So that's the same thing as you want that market to crash and you want to get the best price. You want it to drop and you want your exchange rate to be the best to make that profit. So that's pretty much how you like what shorting a stock means. Now I'm going to go into the hard to borrow fees. This is the math part. It's actually not that hard. It's really only 4 different calculations that you can do in your head pretty much. But you're going to need to find 4 numbers. First of all, you're going to need to find the previous close price. You are going to need to find the number of shares sold short. So that's pretty much the number of shares that you're planning on selling and then buying back. And then you need to find the hard to borrow rate. So these numbers, 13, 1,000, 6%, this is off of the Webull website. They did do an example for us, and I'm actually going to use it because they used whole numbers and it's very easy to follow along with. And then you're also going to need to find the current industry convention. It's 1.02 at the moment. You have to understand that that percent is set by securities and the lending market, so it's set by Webull, and it is subject to change. So it can change. It's usually going to stay at that same number, but if the economy takes a bigger turn, you can expect that number to change. So, but you will be, if you're shorting, you'll know where to look for that. You can just go on Webull's website and double check, but it's at 1.02 and it's been there for a while, so you don't need to worry about that. So we're going to go ahead and jump into how to solve. So these are the only 4 lines, and I'll break them down. They're pretty easy. So for Webull's example, their previous close price was $13. So when you're looking at a stock, let's say NES, because I'm going to do an example with this. This is what I shorted today, and I will explain how I shorted it. They found their previous close. So they said $13. Let's say for NES, the previous close was 1.39, right? Once you find that previous close, you need to find your number of shares. So that's 1,000. The hard to borrow rate was 6%. Mine was 73.58%. Then you need to take into consideration the industry convention. All right, so what you're going to do is you're going to take that closing price, right? So that $13, and you're going to multiply it by the current industry convention at 1.02. That's going to give you your per share collateral amount, right? So when you do that 13 times 1.02 right here, you're going to get 13.26. That's going to be the per share collateral amount, and then you need to round that up to the nearest dollar. So 13.26 rounded up to the nearest dollar is 14. Once you get that $14, that's the per share collateral amount. You're going to multiply it by the share quantity. So how many shares you're planning to short. So in this case, it's 1,000 shares, right? So you're going to do that $14 by the 1,000. So 14 by the 1,000, and you're going to get 14,000. That's going to be your trade value. Once you get your trade value, you're going to multiply that by the annual hard to borrow fee. So that's 6%. So you pretty much need to multiply that 14,000 by 6%. If you don't know how to turn 6% into a decimal, I'll explain it. It's very easy. What you do is you can see that this is 6% is 6.0%, right? So 6.0, you're going to move that point backwards 2 spaces. So 6.0 moved back 1 and 2, it's going to be 0.06, and that's exactly what they put here, 0.06. If I was going to make the hard to borrow rate on NES a decimal, I just move that decimal place back 2 spaces, so 1, 2, and it's going to be 0.7358. That's going to be the decimal place. That's how you find it. It's actually super simple. So you multiply the 14,000 by that hard to borrow rate, and that's going to give you your annual hard to borrow. So if I was going to trade this long term on an annual basis, I would be paying an $840 fee. So after I finish my trade, it's going to be $840. If you're not going to be doing it for a year and you're just going to be doing it for a day or a couple of days, you have to divide that number by the days of the year. So 360. You have to subtract the major holidays that we don't trade on. So that 840 divided by the number of days, 360, equals 2.33. So I am only paying $2.33 to trade this, to short this stock. So if I'm going to short it for the day, I just need to make sure the difference is greater than $2.33 in order for me to make a profit, or at least $2.33 in order for me to break even. Something that you want to take into consideration is that the hard to borrow rate changes daily. So the fee might vary every day, and if you're going to be doing a swing, or you want to take into consideration what the next day is and the day after that, so you're going to have to do this math every day pretty much, and then add it all up to see what your hard to borrow rate is going to be over the entire swing or long-term trade. Alrighty, so let's go into what I did. We're going to calculate what I made today. Like I said, I did make a video on it earlier, but I lost the file. I'll tell you right now, it was a good trade. I did make profit on it. I bought at 2.5. So you can see I drew out a support line here because I saw it making a lot of noise here. It bounced off of here once, a second time, and then it bounced off here a third time. And once it started crashing again, I knew that this was going to be a good time to short. So right when it dipped below the last support, 2.5 is where I got in, and it kept on climbing down and down and down. I didn't know if Power Hour would bring it back up, so I did sell a tad early at 2.3, but it's fine because I did cover everything. We're going to go ahead and do the math to see how much money I gained and what the hard to borrow rate was if I actually made my money. So we have to find those four numbers, right? So we know that it previously closed at 1.39, right? So 1.39, and you have to multiply that by that current industry convention, right? So mine is 1.39, and I have to multiply it by that 1.02. So I'm going to go ahead and type that out in here for you guys so we can do everything together. 1.39 times that 1.02 industry convention, and that's going to give me 1.4178. Remember, I got to round that number up, so that will equal $2 if I'm rounding up to the nearest dollar, and that's going to be my per share collateral amount, that $2. So after I get that $2, what do I have to do is I have to multiply by the amount of shares that I shorted. I only shorted 10 shares, so if you multiply that 2 by 20, that's going to give me $40. And that $40 is going to be my trade value. So with that trade value, what do I have to do after that is I have got to multiply by the hard to borrow rate. So that's 73%, was it? 73.58%. So how do I make that into a decimal again? I move that decimal place back two places, 0.7358. So it's going to be 40 times 0.7358, right? And this is my annual. So this is my annual hard to borrow fee. If I was going to trade this for a year, if I was going to short this for at least a year, I would be paying $29.43. So $29.43. That would be my fee to trade this over the year. And then if I want to see what my daily fee is going to be, I can divide that by the 360 days in the year, and that's going to come out to 0.08. So I'm only paying 8 cents to scalp this. That's what I paid today, is 8 cents. So 73% sounds like a lot, but in reality, I'm only paying 8 cents. So now that we know how much I paid, let's see how much money I made. Remember I said that I bought this at 0.25 and I sold at 0.23. So we're going to do 0.25. Sorry, I think 2.5, sorry. 2.5 and 2.3. So I borrowed 10 shares at 2, and this is not working now. There we go. 2.5. and I got 10 shares, so I'm going to multiply that by 10. So I spent $25, or I sold $25 worth of this share, and then I rebought when it went back to 2.3. Sorry, so you do that 2.3 times the 10 shares, and you're going to get 23. So 25 minus the 23 is going to equal $2. So I made $2. I bought it back, and I made a profit of $2, but you have to subtract that 8-cent fee. So minus the 0.08, and I made $1.92 off of this trade. It was a really quick trade. I think it only lasted, it was right here around 2.5, and I sold here at 2.3. That's at 12.17, and this is at 12, so it was only like a 17-minute trade pretty much. It was pretty fast. Yeah, pretty fast scalp. And I made, I know it sounds like a little, but I was doing it as a video for you guys. Unfortunately, I lost it, so I couldn't post it in here, but that's pretty much it. That's how you short a stock. It's pretty simple. If you guys want to see me live trade and short, I don't mind doing that. Just ask me to set up a date, and we can do a live trade in our Discord server. Once again, if you guys want the files for this, so you guys can do the math for yourselves, go ahead and follow that link to Longhorn Investing and DM me or type in free chat for me to DM you the file. Alrighty, I appreciate you guys hanging out and watching this video. Have a good day.